to the Futures Edge. I am Jim Murio. That's Bob Iacino. That is Chief Technical Strategist for Path Trading Partners, one of our favorites, Mike Arnold. Before we get started, a couple things I'd like to take care of. First of all, thank you to our sponsor, Hardcore Italians. Please use the link. Sign up for their mailing list. Get some things. Get a 15% discount if you use the Futures Edge link on Hardcore Italians. It has really genuinely funny items of clothing and novelty items geared towards you or your favorite Italian friend who needs a gift. Secondly, thank you guys for your support. We just several weeks ago launched on YouTube. We're already knocking on the door of 1,000 subscribers, and that's because you guys give us the support you do, and we are so appreciative of that. You and I both know that legacy media is dying. Never was that more evident than in this election that just happened. Small independent journalism is what is winning. We are winning. Bobby wants to build our platform. I want to build our platform with a sidecar of driving legacy media into the dust. Sorry about that. I'm a cruel man. Mike Arnold is here. Mike, can you tell them where to find you? Because, by the way, Mike Arnold's technical analysis is spot on. He's fabulous.
Just search for me on YouTube, Path Trading Partners, or follow me on X at MG Arnold.
Okay. I was coming in hot, caffeinated, and you're like, yeah, follow me on X. Yeah, really? That's your energy. That's what you're going to give us. Okay.
It's been a long time.
Tone of voice doesn't change much.
I know he doesn't. Okay, we got to talk about stocks. Okay, so again, my joke has been the whole time is, hey, you guys know there was an election? Yeah, Bobby, you can't laugh about it every time. It's a dumb joke.
I'm sorry, I do.
But it's amazing, really, what we've seen. There has never been in my life a declaration of course correction or course change, whatever you want to call it. I don't know where you people stand politically, and I'm not making a comment on that. But yesterday was a referendum on a lot of things: economic policy, tax policy, and obviously markets have massive implications. We got to check a stock market chart up right there. What did the S&Ps rally? Like 3%, right? And Russell was up 5.5%. Mm-hmm. So Michael, what do you see on this chart?
Well, let me go to longer term. This is the S&P, which was up. It's up 2.5%. It just closed up 2.54%, and Russell is 5.7.
Yikes!
Here's what I'm watching. I mean, it's still in an uptrend. Next target area is right around 6,000 to 6,100. If you see here, let me just pull off some of these lines. Every dip into the rotation zone on the weekly basis between the 8 and the 21 EMA, as long as it does not close below the 21 EMA, this one closed right at it. But again, we had a 2-week pullback. We got the election results rotating back up. So until something changes, it's continues to move back up. Now, I can just say at this point, roughly, even if we continue higher, the easiest thing to do for me is just put a 200 simple moving average on the chart, because if you get below the 200 simple moving averages, which is right about 5,400, then you've broken key harmonic levels, you've broken very key trend lines, and you've also broken a couple wedge patterns to the upside. So yeah, 5,400 seems like a long way away, but you could have pullbacks even close to that and still not destroy the medium-term trend. So that's where we sit overall, just the S&P. Now, I am going to be in a little more cautious mode. We'll have to see how we have still the FOMC meeting. By the time this drops, we'll know that Powell's he's not going to not cut 25. He's not going to shock the markets, but it's really going to be if they change the language at all, with continued cuts, or I'm really watching because we know the consumer's slowing down. So we might be pulling forward the year-end rally, and it might end sooner than some people think if we have disappointing holidays.
What will be the indication that it ends?
What was that?
What will the indication be that it's ending?
Well, then we don't have a pattern yet, a major pattern yet that shows a key ending. That's why I'm watching on the daily, the 200 simple, that 5,400 level. As long as it holds, and that will get updated if we go higher, it might even get to 5,500 over the next month. But as long as those levels hold, it's just natural pullbacks. Unless we get to a significant topping pattern, we do have waning momentum coming in here. We are stair-stepping down in terms of momentum with each push higher. So that's why I am in cautious mode, but I am in bullish cautious mode. Which, all right, you got to keep trading with the trend till the trend ends, and there's no massive topping pattern yet.
So I have a question about, it's a fundamental question for both of you, but I also have a technical question. But let me do the fundamental one first. Mike, you just said something that triggered a thought in my head. When you said he's not going to not cut, in other words, he's going to cut, right? 25 basis points. The probability went from before the election, 95.1% to 99.1%.
Yep.
Would that or would that not confirm the political nature of the Fed if all of a sudden he surprised the market and said, we're going to slow down because we've had an election that means X, Y, and Z, right? Because they're just supposed to be data dependent, no?
You know, I don't buy that data dependent because they keep changing what data they're dependent on. And I personally, I mean, a lot of people say and cheer him on like he's the most non-political. I think he was non-political. He would have just done 25 last month. They would have not done 50 going into an election. I'm not buying that, but I don't think they're not. If they change things now, they'll really get the finger pointing that they're political, even more so than I think they already are. So, and I don't think he wants to shock the market right after an election. Now, that's where the guidance is going to come in. If he gets a little more hawkish and say, well, now we're going in after our cut on Thursday, assuming they do, which, you know, it was at 99%, so I don't see him not doing it. But are they going to say, well, now we might need to reassess things, especially with the yields? I mean, the 10-year yields are at 4.43 after skyrocketing today. So and this was already, we were in that trend before, Trump was officially elected, because the yields have been climbing since they cut 50 basis points.
Jimmy, so to you then, doesn't it basically say, I mean, if all of a sudden they start getting more hawkish, the data hasn't changed, except what Mike just pointed out, is that yields are higher on the back end.
So, by the way, so I disagree with what Mike said and what you implied. Here's what I think.
Okay.
Is that, by the way, the time for being political for him is either gone because the election's over, or it's shifted. Perhaps he's going to be political now the other way to try to keep his job. So the one way to do that, there is a way to cut. He has to cut. Like you said, Mike, he's painted himself into a corner. You can't not cut when the market's saying it's a 99% probability of a cut. So he's going to cut tomorrow. I believe that even if he didn't want to, and he looks out at what the market's predicting, I think he knows he has to, it'll be disruptive. That being said, I think he could clearly make an argument that yes, something's changed, and that our new president-to-be is much more business friendly, much more growth friendly, much more deregulation. He could be slightly inflationary based on how great his policies are. If he wants to keep his job, you could say that and say, because of that, we have to look forward and can't be so quick to cut into the future. And maybe rates are going to have to stay a little higher. I think Trump beat that up.
You're saying it could be part of the data that they're dependent upon.
And yes, and Trump is more of a deregulation, lower tax president, and that could be somewhat inflationary. So he could say it, be right, and probably stroke Donald Trump's ego a little bit at the same time. Am I crazy? Either one of you?
Well, I don't think you're crazy. He's not keeping his. I'd be shocked if he keeps his job. Period.
Yeah. I think you're fucking nuts, but it makes sense to me.
So you know what? But here's, and it's also our tariffs disinflationary and inflationary.
Well, depends. I mean, they're inflationary is what you're going to say.
The reality, right?
Yeah. And the theory, though, is that if they can bring people to the table to drop tariffs, and they worked for Mexico, right? Didn't something work for Mexico in 2016 where he threatened tariffs and they came to the table and ended up dropping some of the tariffs?
That happened with France specifically, where Macron was going to put a bunch of tariffs on U.S. products, and Trump threatened 200% on wine and cheese. And Macron ended up going and he actually put them on for a couple of weeks. I don't remember how big they were. And then Macron went back and said, no, we dropped ours. You could drop yours now too.
I wish I knew how many French followed our show, because I'd love to be able to say some disparaging French things. But we love the French if there's a lot of you watching. Michael?
If there's not, We don't. So, Mike, would you, looking at this chart and looking at what you're saying here with your targets between, say, 6,000 and 6,100, somebody asked me earlier in the day, are you buying this? Now, seasonally, we're about to be in a pretty strong period. But I like the idea of a pullback based off of this. Say, I don't know, I'll be looking at maybe 59.12 or something. That looks like approximately where you have that thicker red line. Does that make sense or no?
Yeah, that was the prior harmonic, which we stalled out at before mid-October. This
Well,
is
what's the
not.
exact
This has
level?
been the harmonic that's. This has been the harmonics that's been on since pretty much the end of July. We stalled out there for a couple weeks, pulled back, and now the next major, the harmonic is at 6121 area, corresponding to a very strong top of channel trend line. So that's going to be the area. Could we pull back? Yeah. I mean, I want to see over the next couple of days, especially post FOMC, to make sure this rally holds. So that area, that 5,900 is now turned into very key support for me. And worst case support for me that I don't want to see broken is about 5,800. 5,800 puts some short-term things in motion that we could then start to see at least a short-term pullback, which then could turn into medium-term pullback. But as long as the 5,800 worst case holds, then we're still fine.
By the way, so if you go to my scale, +3 to -3 for bullishness, this just seems like a 1.5 if you had to make a trade today. 1.5 positive, right?
Yeah, I'm still minorly bullish. There's just some longer term things. I'm keeping an eye out for more substantial topping patterns to set up. They have not set up yet. So I can't be super bullish because this is getting very, very long in the tooth. And would I say, if I was Warren Buffett and had a ton of cash sitting on the sidelines, would I be taking it and putting it all in the market at this point? No. There aren't a lot of great deals out there. That being said, for already established positions and for very short-term trading, on a swing basis, that could be a 2 or 3 week swings. It's still in bullish mode. Nothing's changed, but reward to risk is really not skewed well for. There could be setting up a place and time where we can be taking on a lot more downside risk for very limited upside reward. And that's getting truer and truer as yields keep climbing.
All right, can we look at the Russell?
Sure.
And one of the reasons I want to look at the Russell, obviously it had a big jump. It still hasn't made a new all-time high, right?
No, it has. It looks like. Oh, no, it hasn't.
No.
Sorry. Yeah.
I think today
all-time high was back still in November of 21 at 2460.
Yeah, I think today was like the highest level since May of 2021 or something like that. So it was confusing for me why the Russell was outperforming at first, right? And then I started looking at a bunch of other stuff, and I realized it could have been because of the squeezing China thing that President-elect Trump might represent. But in bull markets, historically, if you take out, especially if you take out the last 10 to 15 years, the Russell outperforms, right? So do you see anything different on the Russell chart, Mike, or is it just kind of like rising tides and the whole thing?
For me, it's really rising. I was sort of shocked at the massive outperformance because even with the Russell and with rising interest rates, you have a huge percentage of Russell companies are zombie companies. Now, again, the fundamentals have been thrown out for a while in a lot of different markets and a lot of different stocks. So could we easily break out? I think that we have a magnet price to at least retest the high area from November. And, if we break out higher, then, we're looking at a minor area of about 25, 60, and a major area of about 2665, 2666. There you go. So
there you go.
What would change it for me? Because now I'm in Russell. In the Russell, I got to flip around these harmonics. So these levels are slightly going to go up. But the only thing that gets me concerned is this is sort of interesting right here. Look at this triple spike bottom. And this is a weekly chart. So we have weeks in mid-January, in the beginning of February, and then reconfirmed the middle of April. See these three spike lows? They're right at 62.5.
Huh.
Okay, that's going to change slightly. They're right in that area. So if we start losing roughly around, I'm just going to call it because I think this is going to eke out higher prices over the next couple of days. We're around 1950. If we lose 1950 in the Russell, it is not good from any continuing medium or longer term bullish mode. We would have also lost the 200 right there. So just again, if you want an early warning sign, stick the 200-week moving averages on a lot of these indice charts. I already covered that with the S&P. Stick it on whatever chart you have. Just stick that 200-week on there, and watch if we start breaking down any price action below that 200-week. It's probably turning into a major mid top to a longer term top.
So you mentioned a 19-something level that if it closed below it, it's a bad thing. What was that level again?
Just go with 1950.
And was 1950 the low of those spike lows too, the three of them?
They're just slightly below that, but let's say we go up to the recent highs. If I just de-anchor this, because I think we still had a little more. If we come up there, look, it's 1947. So 1950, it's where the candle bodies are on here. And the probabilities would shift drastically if we close below that 1950. So we would have lost all major support. We would have lost this other support, prior support shelf. We would have prior resistance shelf becoming support. So we would have lost everything key, and from a harmonic perspective, triggered the probability shift. So that's the number I just mark. I keep an eye on the 200. It's right in that vicinity. And we start losing that. I get really edgy in the short term.
Got it. Bobby, can we remember James mentioned that Mag 7 ETF? Can we take a look at that?
Mags.
MAGS, is that what it is?
Yeah. Oh, I love these on the fly ones. These are some of my better ones because it's not so over. Look at him. He's looking at it already.
Yeah.
Yeah.
What don't you look at, dude?
What?
What don't you look at?
I look at a lot of things.
Yeah.
No matter what we put up there, there's always something on his chart.
Yeah.
It's just the nature of being a technical analysis nerd. It just fascinates me. So,
yeah.
Wait, can I make a comment real quick about this? Because this is something that's interesting to me and I want to address. Russell led the rally, up 5.5%. And now you look at the Mag 7. Mag 7's not much of there's definitely a laggard today, but above their old all-time highs, which was just a couple months ago. This to me seems like a pretty broad-based rally when you consider all things, yes?
I mean, you still have the Magnificent Seven still running it into the market. They're not as outperforming as before, but they're still performing. So that's where we have significant waning momentum, but there's nothing. The only thing that would get me concerned on the mags, if you're going to watch this, MAGS, as you said with the symbol name, the area of the concern that would start getting me would be if we drop back below 46 on a weekly closing basis. If we drop back below 46, I'd start getting concerned. And then if we followed through with a close below 43, that would get me at this point, something shifted. We're in probably major rollover mode. Until then, the next target's higher, 51.60 and about 53.
Okay, so by the way, to my lawyers, Mark and Stacy, I am looking at this chart. My licensing is for futures. I'm looking at this chart for information purposes only. I'm not recommending any trades, nor am I in futures, by the way. Moving right along, Bobby.
Well, what I like about this is, so if you just look on a pure percentage basis, the Russell still outperformed the Max, right?
Yep.
But I think you can only compare the Russell in part because of what Mike said against other indices as opposed to against an ETF with 7 stocks. And the reason I say that is even with the zombie companies that Mike mentioned, the Russell 2000, which I think is really only 1,956 stocks, if you look it up, right. 88% of them were positive on the day. You go to the NASDAQ and it was 80%. You go to the S&P and it was 77%. So the indexes are pointing towards small cap. And I mean, let's be real here. The largest company in the Russell 2000 is a 14.9 billion market cap. So we talk about these being small companies. There are small companies in there, but there are also really, really large companies. I mean, 14.9 billion market cap is nothing to sneeze at.
Yeah. Right. All right.
All right. Somebody asked me about crude oil today, and while you're putting that chart up, Mike, Jim, if you don't mind,
I don't.
somebody asked me. I did a show today, and somebody asked me about crude oil. And is this the daily? Looks weird.
That's the weekly.
Okay, so start on the weekly. That's fine. And somebody said to me, "Well, it's drill, baby, drill. So shouldn't crude oil be going down?" And I went into my whole spiel about how the comparison of how much oil is out there now actually is not an indicator of where oil is going to be in the future. You look at the rig counts, you look at the capital investment all down, you look at the production starting to head lower, and you look at the sort of 18 to 24 month lag time. Even if they started today, which they can't do until January, right? You'd be looking at a long time before crude oil actually hit the market to drive it down. But what maybe isn't there, or rather is in the market already, is this idea, those sort of animal spirits that President-elect Trump potentially brings. It's only been a day. Just so everybody knows, we delayed the recording of this one day in order to have the election results on Mike's charts already, right? So the demand could play out before the supply does, and quite a long runway, right? So, Mike, what do you see here, weekly, daily, and whatever else you want to look at?
Well, let me start with the daily because today was fascinating from a daily perspective.
It really was.
We sold off. Election results came out and crude was down substantially, and then it bounced back really strongly. Right to a very key area that it's tried to dip low and coming back up. This price action, when something is breaking, especially with cycles at the top, and bounces back strongly, makes me sit up and take notice, especially if we start popping above about this 72.60 level in the short term. On the weekly, only way I can sustain more bullish price action, we have a very key, I'm going to put up another line here, a very key prior support level confirmed with a couple key closes, a couple dips below it and closes above it, is right about 73.50. We did break above it for a couple weeks and slice back through it. This is also the 62.5 harmonic from the highs back in the beginning of October back to the lows in September. We start closing above about 73.60, let's call it. I'm really going to start watching for potentially we then be stair-stepping higher on a weekly chart basis, not able to break very key support and actually supporting at slightly higher levels and forming a higher base. So that could get interesting, and then I'd be watching for at least a return to around possibly the 77 level in over next few weeks.
Okay, so to put in perspective, it's the what level that if we close above, it could green light the move?
73.60.
Because I love Bobby's point about in the short and perhaps even short medium term, out the demand story being a bigger story than the drill baby drill story. That is brilliant. If you're going to take their takeaway from that, that's a takeaway. That's really cool. I have a suggestion.
Way, that is a legitimate comment because Jimmy hates giving me a compliment.
There's no question about it. I want that to be known too. Like literally, my hand shakes when I have to give Bobby a compliment. Can I do suggest another one on the fly that I think you guys, when I make my case, you'll find very interesting?
Sure.
Yeah.
Coca-Cola. So, by the way, I'm going to quiz you people on what my notion was this morning at 5 o'clock when I was at the gym. I looked at Coca-Cola in the pre-market was up 2.5. That struck me as odd. I thought it should be trading lower. Why should it be trading lower, Bobby? Do you know what I'm thinking?
Why it should be trading lower? RFK.
Bingo. You get it. RFK. And this morning in the pre-market, it was up 2.5. And I'm like, shit, maybe I should just sell this thing, which I did not do, of course. But then I looked at it 3 hours later, and it seemed like I may have been an early adopter to that. I think this is a really
anyone sell it or buy it.
What's that? I'm not recommending anyone sell it or buy it. I was just talking about using it as a proxy for how serious the globe is taking RFK's potential MAHA, MAHA, whatever we call it, Make America Healthy Again, which by the way, I think there should be some, if the federal government is going to just prove any worth at all, it should maybe explain to kids that high fructose corn syrup is awful for you, causes fatty liver disease, and we all know this.
Yeah.
I hope that RFK brings it to light. Which again, people should have the choice whatever they want. I'm not saying that Coke should be illegal. Just if the federal government, I don't even think they should be weighing in on health shit. But if they do, maybe give us the real information. Mike, what do you see on this chart?
Jim, don't you know
Fruit Loops are
healthier than eggs and butter? Fruit Loops. Come on.
They literally told us that. This is the way to get my blood boiling is for 30 years. The FDA and the USDA said that Frosted Flakes were part of a healthy breakfast and butter and eggs were not. Butter and eggs, which is literally, Dr. Lufkin calls eggs nature's Ozempic. I eat about 5 eggs per day and I can't keep weight on. Please continue though, Mike.
Yeah. Eggs are wonderful. I eat 4 a day. They're tremendous.
Good.
So good.
Yes.
So
yeah.
Eggs, and I do them in butter too. Come on. Let's get with it, people.
It's good for you. Yeah.
All right. Longer term. We broke some very key levels a couple weeks ago with Coke's earnings. I would not be surprised. We're coming into some key support. I would not be surprised with cycles at the bottom on a weekly basis to see some kind of bounces, minor bounces in Coke. Then I'd be looking personally for rollover plays, because I do like your thesis from a fundamental standpoint. From a technical standpoint, it is a little overdone in the short term. So if I was going to structure a trade, and again, not trading advice, I'd be looking for any kind of bounces and then be structuring key rollover trades. And my key rollover, I keep citing the 62.5, but look at where the 200 on the weekly is with the 62.5, which could be a very key magnet price after a bounce. So
I love it.
That's
Bobby.
That's exactly what I'm looking at from a technical perspective. And let me just jump to the daily, because you see anything. And if I was looking to set up a trade in this, I'd be watching for any bounce into the daily rotation zone, somewhere between the 8 EMA or 21 EMA, and then another resumptive move down.
Love it. Bobby, got anything on this?
Yeah, I really like the downside of this chart. I might actually be recommending selling a rally here and using, of course, the newsletter exemption to do so. I don't like Coca-Cola long term for a lot of the reasons you just said. I think it's a great idea, the sort of, what was it, MAHA, Make America Healthy
That's
Again.
what he says, right?
Yeah.
I think that's what the H is. I thought it was happy at first. I was kind
It actually becomes a thing. There's going to be a lot more than just Coca-Cola. I mean, you could look at like your Nabiscos and your Smuckers and a bunch
General
of
Mills.
At the risk of pitching one of our own former guests, you guys got to read The Lies I Taught in Medical School by Dr. Robert Lufkin, or at least watch our podcast with Dr. Robert Lufkin, and you'll probably short the shit out of Coca-Cola. Go ahead.
What do you want to look at?
Actually, since we're going down this path, let's double back to copper, because copper kind of fits in with the whole thesis of the market thinking Trump potentially is squeezing China and obviously the dollar strength. I want to know what you guys think about that relationship. Like, should the dollar, obviously yields jumped, and it seems to me it's because the market may think Trump's inflationary. Although, Mikey, before you talk about this chart, what do you guys both think of the theory that his tariffs not put on at the levels he threatened before in his first term? He didn't put them on anywhere near the levels he threatened. So that goes back to James Fishback's comment of take him seriously, but not literally. And they didn't result in sustained inflation, but we're also at a much lower level of inflation with an economy that potentially was getting long in the tooth. And I would say his deregulation and tax cuts helped to extend that rally. So with that out there, what do you guys think? Jim, do you
When
have
I heard him talk, I think it was 2 weeks ago, when he came on and say just like tariffs, I love tariffs. Tariffs is my favorite word. That sounded to me like a man who was absolutely clearly trying to talk his book. That's what we say in the trading world. And he really wasn't saying what his true feelings were. He wants the world to believe he loves tariffs so he can use them as a cudgel and a negotiating tool and get other people to drop tariffs, which, by the way, would be disinflationary, not inflationary, if you get other people to drop their tariffs. So the reality is I don't think Trump's an idiot, and I don't think he's going to slap just tariffs across the board on products that we use and make the American people suffer too much on the short term. Maybe make him suffer a tiny bit just to negotiate. But I don't think he's going to try to crush China. I think he wants China to think that.
Elon did say he wants to prepare Americans for some short-term pain. Mike, what do you think?
Just based off of copper. Well, I like to tie in how you went from the doctor thing to Dr. Copper. First, I'm going to tie that in right there.
We didn't even know that, and we did it. Bobby did it. Yeah.
See?
We are so critically acclaimed that's why
That's
call
why
it.
we're critically acclaimed. Yeah.
Now, maybe you didn't mean that, and maybe I just picked up on that because I'm just that kind of guy. But you know what? I'm giving you the benefit of the doubt that that's where you were going.
Well, this is the worst move in copper, single day move in copper since I had it written down somewhere. But since a long time, since a couple of years.
Time.
And after when I was looking back at that, generally moves like this. I just went through puberty.
You guys heard that? That sounded like the Brady Bunch episode. It's time to change.
Generally moves like this are followed up by a rally that ends up in a lower move or just a lower move. So I want to hear what you think about it.
I mean, it broke key support. It technically today closed below the 62.5, below the 200. The magnet price is now back to around just in front of $4. Does that mean it's going to go there in the next couple of days? No, I would not be surprised with this kind of move. We're leaning against key support. You might get a little consolidation or bounce move, but this in the short term is lower prices, at least, or I'd say short to medium term is lower prices. What's fascinating enough is this is even on the daily chart. Back when it did spike above that, this has been on the charts forever, that 4.72 area, it spiked above it, closed below. It could not sustain anything above that 62.5 to ship probabilities back up, and also could never regain a prior major resistance level. And then all it's done is sell off, consolidate, and then with the Trump results closing below very key technical levels. I mean, it was sat. Look at this major base here that sat there for a couple weeks that was just broken. So 4.3 to 4.35 is now key resistance. We're at a key level on the weekly. And look, that weekly 200, which is an area, I'd still stick with that $4 mark as the key magnet price. But this is going to be a magnet where it found some support in that area the last couple times back in August and in September. So would I be surprised maybe at some point in November, over the next, maybe by the end of November, for it to come down here and retest that magnet price again? No, I wouldn't. That's what I'd be looking for on any bounce trades. If we get that bounce based off of maybe slightly overreaction today, I'd be looking for, hey, can it return to resistance and then roll back over and structure a trade to the downside?
So, Michael, what is, and again, as many people know, I am long copper up to my eyeballs, but I have been for years. I wouldn't worry about it too much. I'm fine. But my question becomes, what is the level we must close above to make this whole down move today a nightmare? Because if you take, I mean, just a dream or nightmare that's over. Because if you take today out of that chart, it looked to me like a nice little bottom. We were breaking out of it and headed higher. What level do we need to close above to greenlight an up move?
Well, so before today, it was going to be about 460. With today, you have to get above about 457. The warning sign, I mean, this was a classic shake and bake pattern to me, which you had a base,